On this video, I'm going to talk about my 2023 interest rate and housing market predictions, how it affects you whether you're a first-time home buyer, you're buying your second or third home, you're looking to move up, looking to invest in real estate. Maybe it's time to get off the sidelines. We're going to answer all those questions. We're going to go over what happened in 2022, different interest rate predictions, give you all the information that you need to make an informed choice whether you're looking to buy a house. For those that don't know me, I'm Emmett Dempsey. I'm a mortgage broker and owner of Treasure Coast Mortgage here in Port Saint Lucie. I've been helping families with home loans for over 15 years. I'm not just a spokesperson, I actually do the work. Okay, so before we get started, also you can go ahead and leave a like on this video. It's totally free and it's totally awesome. Really helps out YouTube find more videos like me, helps the algorithm. Go ahead and subscribe to this channel if you would as well. All that being said, let's go ahead and get into the meat and potatoes. Here we go. Okay, here we go. So I'm going to go over my 2022 forecast as well as look at some industry folks that I respect and what they're saying about interest rates and home price growth, and just kind of give you my own 2 cents. Again, with a grain of salt. I don't have a crystal ball. I just see what I see it by reading the news and things that I study every single day. So to help you as a home buyer, kind of make an informed decision. So here we go. First and foremost, here's my YouTube channel with my 2022 housing rate forecast with all the dynamics leading up to it. We're coming off a historic year. We looked at how past Fed presidents tamed inflation. It came into it, and inflation was the name of the game. And we were hoping that they would start raising rates faster to tame inflation. That didn't happen. So what did my 2022 say? You can kind of go back, but don't laugh too much. But, anticipate mortgage rates to rise, but 3.75. Well, that's not exactly what happened. So if you go here, you go on my website, tcmortgage.com, go to the rates section. You can see, today's rates and what they are today. They're in the mid to low sixes, in that rate range. But look at the rate trends over the last year. We were into the threes. We basically doubled, in faster than we ever have in history. And then now we're on our downward trajectory because inflation rate readings are starting to come in. Okay, so basically inflation is the name of the game. So this is, Barry Habib, MBS Highways forecast, and this is what I used last year, and I'm using a part of it this year. Basically, inflation drives mortgage rates. I love this graph where you can see since 2018, this pink line is the CPI, where inflation was very, very low for a lot of years, and then into the pandemic, and to this QE period. It's called quantitative easing. Now, traditionally, dating back, for decades, whenever inflation rose, rates rose. It was kind of almost like a one-to-one correlation. And what happened was this QE period, mortgage rates were kept artificially low. So they were like putting a ceiling on interest rates because we were coming out of a pandemic. You had to deal with all those job losses, and for kind of stimulus. That's how the Fed intervened in the mortgage market, and that's why it got so crazy in 2020 and 2021 because interest rates dove into the twos. So it was historically lows. So the reason wasn't because inflation was low, and that's allowed them. That was the reason why the Fed continued QE. But this QE period, and it kind of ended early this year. So when the stimulus came off, the QE came off, inflation happened. It's almost like the Fed just kind of dropped it. Like just let go of the rope. and it was just whoop. And all of a sudden inflation rose, and so did interest rates very, very fast. Okay, so that's kind of what happened with inflation. All right, so the biggest question is when will inflation peak? So right now, a lot of these inflation readings we had in the summer times because we had very, very low 2021 numbers going into it. So comparatively, interest rates rose so much. When you compare August of 21 to August of 22, it was from 0.2 to 0.6, like that percentage rise is so high. So those inflation readings continued the Fed. So the bond market didn't like it. So they continued to drive up the yields of mortgage bonds. So as these lower inflation numbers are coming in, so we're going to have higher numbers to compare to, once we get newer numbers. So we expect in the first quarter, for rates to mitigate, to do that. So what is my interest rate prediction? So let's take a look at a few folks here. So interest rate forecast here, general consensus, Freddie Mac, Fannie Mae, MBA, they predict in the sixes, which we are now. I'm seeing some of these forecasts, going lower. I happen to believe, along with Barry, that I think rates are going to mitigate into the low. We're going to move near 5% even the first half of 2023, because with all of these, lower inflation, things of that nature, we're heading to a recession. Once recessions happen, rates do come down. So that's kind of what I think for interest rates. It's just the Fed has finally got off their butt and started to raise the federal funds rate to tame inflation. And once that happens, since there's no QE keeping it down, inflation is more important than ever. So once that happens, it's going to come down. Okay, so let's take a look at the home prices. Now, housing forecast from last year, I think we said mid-single digits. High single digit appreciation is still providing a great wealth creation opportunity, and that's basically what happened. So when I look at my market, here's Florida. So this is from November, but this still holds true. Now, what's going to happen is, so we've had sales have dropped because demand has dropped, so there's not many transactions. However, there's still a huge supply and demand imbalance, and I've talked about that several times on my channel. You can find that information. So it's just there's less than 1 million homes on the national market for sale, whereas back in 2008 there was over 4 million, and there's more millennials and Gen Y that are looking to buy homes and building household formations than there are homes. So when you look at here, you're going to see all the housing crash YouTubers say, "Oh my gosh, sales dropped 30%, 40%." However, but look at the median sales price. It keeps going up. So the single digit did hold true. So it did hold true, the average sales price. And then, more specifically in my MSA, it definitely held true, minus 36% in closed sales. Okay. But yet the median sales price went up double digits, 11%. Okay. Because, where we're at in Port Saint Lucie where the Mets are, it's definitely an affinity market. People are moving here into Florida. So that's definitely true. Now, so that's what I see here. So so basically, we kind of hit the appreciation, and just look at these inventory levels too. You might hear on about inventory is rising. Yeah, we went from savagely unhealthy, and I'll talk about Logan from Housing Wire in a minute. To 2.8. A buyer's market is still 6 months of inventory. Well, still less than 3 months of inventory. So it's still very much a seller's market. However, we're kind of in a lull. And I've told my buyers that, look, right now before spring buying season comes, right now is a good time to maybe get a discount on price, maybe ask for concessions, do a 2-1 buy down, and things of that nature. So this is Logan Mohtashami's housing forecast. And here's a picture of my wife and I at AIM Fuse in Vegas last year. So great guy. This is a great party. So Logan's very, very, very smart. You should check him out on Housing Wire. What does he have to say? Basically, his kind of almost in line with Barry is that if the 10-year does what he expects to do and what Barry expects to do, we're going to have rates, possibly, anywhere from 5. He says from 5.25, 7.25. I think we could even see mortgage rates under 5% if the 10-year breaks under 3%. And based on what MBS Highway has said, and he's been spot on. I think we can easily see interest rates into the 5s, low 5s, even as early as first quarter. But of course, it's going to depend on the inflation reading. That's if inflation holds true. And what I expect for home price appreciation, I'm going to say basically the same thing, mid to high single digits, maybe touching double digits in certain areas. Of course, certain areas of the country are going to be more affected than others that had rise run-ups. But here in the Florida market, I don't think as much is going to change. I think it's going to not be as savagely unhealthy as Logan as he says. That's his favorite adjective, savagely unhealthy housing market, which we did have in 2021 with all the bid over ask and things of that nature. But I think we're going to get approaching a more normal market. Whereas you have good buyers and sellers, it's a little bit equal, just maybe slightly towards the seller's market. So that's kind of where I think we'll be. So, of course, hopefully have a good 2023. And if you want to know your numbers, what you can afford and what the numbers look like for you, definitely give me a call. Go to tcmortgage.com.